Gold added another $15 to that run, hitting a new all-time record high. Gold traded above $2,200 an ounce for the first time ever, and silver had an even stronger day than gold. As I've been, saying on this podcast, silver is the real buy. I mean, gold's a good buy too, but silver's an even better buy.
Peter Schiff's recent video analysis of Jerome Powell's conference had some interesting insights. Powell's dovish tone led to record highs in the stock market. Gold prices rose, and silver outperformed because Powell favored risky assets over safe havens. Schiff predicts that both metals will continue to gain. The US dollar weakened, but Schiff believes it hasn't fallen enough. Schiff's analysis provides valuable insights into the market reactions to Powell's conference, making it a must-watch for investors. So, keep watching till the end.
Now, the big story is the Fed announcement and the Powell speech. As expected, the Fed left interest rates unchanged at 5.25 to 5.5. But the press conference, I thought, was another very dovish conference by Powell. And the markets agreed because the Dow Jones and the S&P rallied to record highs. In fact, the Dow closed up better than 400 points. We're above 39,500. So we're almost going to hit 40,000 on the Dow. We'll probably be there pretty soon, given the green light that Powell gave to the speculators to go out and buy risk assets. Now, not just risk assets, safe haven assets. Gold rose about $30 during the U.S. session. GLD, which is the U.S. ETF, closed at a record high close. It didn't have a record high intraday, but the close was a record high. Now, already this evening, gold added another $15 to that run, hitting a new all-time record high. Gold traded above $2,200 an ounce for the first time ever, and silver had an even stronger day than gold. As I've been, saying on this podcast, silver is the real buy. I mean, gold's a good buy too, but silver's an even better buy, and it's now almost $26 an ounce. But it's got a long way to go, and I think both gold and silver are going to rise. The dollar fell on the news. It didn't fall enough. I think it's going to fall a lot more. Commodities in general, I just posted again the chart of the CRB index on my Twitter account, which, by the way, since my last podcast, I have shot over 1 million Twitter followers. So I think it might have been this podcast that put me over the top, because after I finished the podcast, I watched the Twitter and, all of a sudden it jumped up and I got to over 1 million. Now I'm almost 3,000 above 1 million now. But so on my, I'm sorry, I should have called it Twitter, X. So I posted again, just look at it, the chart for the CRB. This thing is going to rip. I mean, this is a beautiful looking chart. Commodity prices, oil was down today. That's because it had got up to 83 and it pulled back and it's about 81.65. But copper jumped up big again today, not as much as silver, but it was a good move. But I think we're on the verge of the biggest bull market in commodities since the 1970s. Of course, this flies in the face with Powell claiming that inflation is going to go back down to 2%. There's no chance that inflation is going to go back down to 2%. All the data shows that inflation is on the way up. Plus, if you understand what inflation is, it's got nowhere to go but up. And that, I think, is why the markets reacted the way they did, because Powell basically dismissed the bad inflation news that came out for January and February. I mean, he kind of said, well, it's due to seasonal effects. Well, it's already adjusted for that. So it's like you can't say it's seasonal when the numbers are already seasonally adjusted. It's like saying it's transitory, which basically is what he said. So he dismissed it. And the Fed is still saying that we're going to get 3 rate cuts this year. But in addition to that, the even more dovish than that was the admission by Powell that they're going to begin shortly in reducing the size of their asset sales, quantitative tightening. They're going to pare it back. So they're going to start shrinking the balance sheet more slowly. Now, I've been saying the Fed is going to go back to quantitative easing. This is just the first step in that process. First thing they do is less QT, and then the next thing, they're back to QE. Because if the Fed really was serious about fighting inflation, the balance sheet is still much too big. It needs to continue to shrink, and interest rates are not high enough. They got to go up. In fact, let me look at a couple of the inflation reports that we got after I did my last podcast on Wednesday, because I talked about the hotter than expected CPI. But what I didn't talk about was the hotter than expected PPI, which was even worse, that came out the following day. So the February producer prices were supposed to go up by 0.3. They went up by 0.6, double what had been the estimate. And in fact, the range of expectations went from 0.2 to 0.3. So double the high end of estimates. Now, year over year, and producer prices had come down a lot, mainly because commodity prices had come down a lot. Well, they're not going down anymore. They're about to explode. But anyway, so the expectation was for the year over year increase in producer prices to be 1.2. Instead, it was 1.6, up from up 0.9 in the prior month. Now, again, the range of expectations for the year over year PPI was up 1.1 to up 1.2. So a pretty narrow range, but we came out well above the top end. And even if you take out food and energy, the core was supposed to be up 0.2 and it was up 0.3. But this was a bad report. And also, we got import-export prices. The key, in my mind, is the export prices. Export prices were up 0.8% in 1 month. That's like a pace of like 10% inflation, right? Because export prices, I think, are more important than the import prices, although we buy a lot of imports that are still important. But to kind of show what's going on with domestic prices, because the export products, this is the stuff we make here, right? So the cost of our exports is going to reflect the production costs that are rising. And the prior month, January, export prices were initially reported as up 0.8. They revised that to up 0.9. And then February was up another 0.8, back to back. Big increases in the price of the stuff that we are producing here in the United States. So all of this, bodes ill for anybody who is expecting lower inflation.
Thanks for embarking on this journey through Jerome Powell's conference with Peter Schiff. If you've enjoyed unraveling market mysteries with us, why not sprinkle some stardust on that like button and hit subscribe for a front row seat to future financial adventures? Don't keep those insights to yourself. Spread the word in the comments below, and let's build a community of savvy investors together. Until our next rendezvous, may your portfolios sparkle with success and your dreams take flight. Catch you on the flip side.